Australia's economy and our property markets, they don't operate in isolation. So once a month, we have a regular look at the big picture, the macroeconomic factors affecting not just Australia's economy, but the world economy, to help us better understand what's ahead for us. And I do this once a month in these big picture podcasts with Pete Wargent. Now, while regular listeners will know Pete well, if you're new to the podcast, well, firstly, welcome, because I can see there are thousands of new listeners every month. But the reason I'm keen to discuss these matters with Pete's not because of his academic credentials as a chartered accountant, chartered surveyor, or because he's got a financial planning diploma, but I enjoy these chats because of the credible perspective Pete brings on what's happening around the world as an international investor and as an international business person that Pete is. So for our first Big Picture podcast of the year, Pete and I are going to do a short review on what happened over the last year, and we're going to give you our thoughts on the big issues that will influence the world economy, Australia's economy, and our property markets. So welcome to the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
It wasn't that long ago that we celebrated the beginning of a new year. It was 2020, and we anticipated another decade of the roaring 20s. But instead, COVID-19 dominated the news, the economic landscape, and our lives. And at one point, it looked like Australia was on track to become COVID-free, and then along came Delta, and our economy changed again. Looking back to this time last year, we thought we're over it, and then Delta changed everything, and the southern states, and particularly Melbourne, were once again locked down. And when we eventually thought that we had this coronavirus thingy licked, along came Omicron. But despite that, our economy flourished, unemployment fell, our property markets delivered a once-in-a-generation property boom. And despite the wall of worry with coronavirus, 2021 was a great year for many investors. So what's ahead for us now? What will 2022 bring? What will the big issues be that will influence our economy and our housing markets this year? That's what I'm keen to discuss in this month's Big Picture podcast with economic analyst Pete Wargent, who's a lifelong student of and commentator of our economy. Hello, Pete.
Hi, Michael. Great to be back on.
Now, Pete, it's interesting because for the last couple of years we've been speaking with you when you were overseas, but you're back in Australia now.
Yes, and things are much more normal than they might seem from reading the media when you're overseas. I've been in Sydney for a couple of weeks and life was pretty much back to normal. A lot of people working from home and now back in Queensland. So great to be back.
Yes, it's nice to have you here and we'll keep having these regular shows. I thought we'd start off with a bit of review of 2021. And while the theme of this podcast, like yours, is about property, we tend to talk about in general the factors that affect our property market. And if we look at 2021, while it was a good year for the economy, it was a good year for property, a couple of things actually went wrong, and yet we survived them. We had several waves of coronavirus that disrupted the economy. Inflation took off despite what some people thought. It was boosted by people spending more money, by Australians being at home and spending on different things, I guess. Around the world, the key central banks started to remove their stimulus as they felt their economies were doing better. And there's everyone thinking the rates are going up. China, that created some issues last year as well. Its growth slowed down and there were problems with its property developers. And of course, there was all those geopolitical tensions. Yet despite that, Pete, Australia's economy and Australia's property markets did pretty well.
Yeah, it was a funny sort of a year, wasn't it? We saw the economy rebounding quite nicely as the year rolled on. But then in the third quarter of the year, Sydney and Melbourne and the ACT were pretty much in lockdown. So everything was put on hold for a while. And then just towards the end of the year, things reopened and started to get back to normal. As you mentioned, I think one of the key drivers over the past couple of years has been lower real interest rates, which tends to be really good for housing. I guess that would have pointed to sort of 20% gains for the housing market, which is more or less what we got in the end. But it was there were some ups and downs along the way.
Well, it's actually defied most people's predictions of the economy and also the housing market. And I think last year the regional markets did particularly well, the regional property markets, because a small group of Australians moved from the capital cities to regional areas. And while losing 15, 20,000 people from Melbourne or Sydney won't really affect those markets, put 500 people into a number of small towns, that does affect the property values, but also the rental values in those areas.
Yeah, so one of the key themes in financial markets is liquidity. So it doesn't matter if you're talking about a bond market or a stock market, liquidity is always a key issue. And when it comes to regional housing markets, it takes a relatively smaller number of people buying or selling to move prices at the margin. And as you mentioned, a lot of people moved to coastal regions in 2020 and 2021 when there wasn't much stock on the market. So that really shifted prices. Also, rental markets, though, very, very tight. I think a lot of people actually bought second homes. So really confused analysts who were expecting rental vacancies to rise because of the lack of immigration, but actually rental vacancies, they're the tightest we've seen in a dozen years. So one of the things you do find in real estate is that as people get wealthier, they just buy more property. And that's basically what's happened. So rental vacancies are actually very tight. And that's even before we reopen the border to backpackers and skilled migrants and so on. So, yeah, interesting times. But a lot of people bought second homes last year, and regional markets, big benefit.
Anecdotally, I know a number of people who did that. They couldn't go overseas, so they bought. Only just recently heard of a friend another one who bought in Byron Bay. So that's what pushed up that price. And sight unseen, because he couldn't go and see it, but he did enjoy his time there over the Christmas time. But while the work from home, the flexible working hours has seemed to encourage that regional migration, there's a bit of anecdotal evidence that trend's reversing, Pete.
Yeah, a lot of it, I think, at this stage is quite early to say. My gut feel is that eventually people will be drawn back to the cities for the same reason that they were there in the first place. I think when you think about how businesses operate and who gets promoted, well, we tend to promote people that we like and who are visible. And from what I understand, actually, a lot of the people who haven't gone back to the office are some of the younger employees who don't necessarily like working face to face. But I think gradually, people will return to the office. Certainly in January in Sydney, there was a lot of people still working from home.
You could see that in the streets, couldn't you? The CBD was empty.
Yes, although funnily enough, when you went to the beach or the zoo, they were very busy. But I think a lot of people taking that opportunity. It's been a tough year for a lot of people. You know, eventually, I think the cities will reassert themselves, and probably just starting to see that in some of those empty units in Melbourne CBD. You know, just starting to fill up again.
I think one of the other things we should remind people before we talk about what's going to happen in the year ahead is that none of those cliffs that the naysayers warned us that we're going to fall off ever eventuated. So I think one of the predictions for 2022 is there'll still be people giving us bad news and looking for things to go wrong. But remember early on there was a talk about when interest-only loans became principal and interest that would cause mortgage stress. There was talk about double-digit unemployment and the cliff would fall off. There was talk about potential issues when JobKeeper was removed. None of those concerns ever eventuated, did they?
No, in fact, it's already happening this year. There was a narrative in the media about vendor fear of missing out and a rush for the exits. And then when we got the hard statistics, listings were actually down 8% in January and the market's very, very tight. So I think sometimes, well, people are always looking for the next big issue. And that's not just in property. When the world moves on from the pandemic, we'll be told to worry about World War III. That's just the way the world works.
Yeah, well, look, I know they're talking about global warming now, but I'm old enough to remember when we talked about global cooling, there was also going to be a shortage of food. So there's always things. But I think there's lots of reasons to be optimistic for 2022. I think that our economy is going to do well and Australia is well positioned in the world economy to do well. Look, I think coronavirus, unless there's new strain or some new issues with it, will eventually move from a pandemic to an endemic, and we'll just have to get on with our lives.
Yeah, look, it's already happening. England has removed all restrictions now. A number of other countries have too, like Denmark and Finland. So the world's getting there. And in fact, it's been really nice to see a few aeroplanes in the sky. You haven't seen that for a couple of years. So, yes, generally speaking, the world is heading back to normal. I think people have a tolerance limit for the news cycle. I mean, there can always be curveballs, of course, in a pandemic, extra strains, as you mentioned. And there might be some unforeseen outcomes. But I think generally speaking, the vaccines have been very effective and things will get back towards normal.
One of the things we've got to remember is that Australians stashed their cash. There's suggestions of even up to 250 billion in Australians' cash reserves. A lot of us are well ahead in our mortgage payments. I read recently up to 4 months ahead on average, which really means even if interest rates go up, most households are not going to be affected, considering that there's already those buffers in place when they borrowed the money. And as we get out, I think a lot of us are going to feel we deserve to spend some money on ourselves and look after ourselves, Pete.
Yeah, so this is a key point. We read a lot about household debt, but don't hear quite so much about the other side of that equation. And that's, well, nearly $500 billion in household savings. And that's a huge extra bucket of funds that people have built up over the past 2 years. And as you mentioned, the average mortgage, because of prepayments, which is quite a uniquely Australian way of managing finances, but there's a huge buffer there for most established borrowers. So, I mean, if all of those excess savings are unleashed into the economy, we could see the unemployment rate falling to, well, the lowest we've ever seen. It could go to 3%, could go lower. So, I mean, full employment has got to be a good thing.
Well, of course, a lot of it has to do with consumer confidence. And if we feel confident that we're coming out of the coronavirus, if we feel confident about our jobs, and I think people can now, they don't have to worry about losing their jobs. If they feel wealthy because the value of their homes have gone up, and boy, have they, and their share portfolio and their super's doing well, the wealth effect kicks in and that helps the economy, doesn't it?
Yes, yeah. And I guess what people are really discussing is, okay, well, let's say things start booming back as we reopen fully and all those savings get spent. Well, what happens to interest rates and inflation? The Reserve Bank actually spoke only yesterday at the time of recording, and it seems, I mean, interest rates will have to go up eventually, but it will most likely be very considered and very gradual. I think inflation in some parts of the world has really taken off. If you look in parts of Europe, even the United States, but actually Australia has a somewhat different inflation profile from some of those other countries. We've got underlying inflation, 2.6%. So it's actually in the target band. And if you look at what's driven that, well, it's really been food and the cost of, new housing. If you're trying to get materials or tradies, it's very difficult at the moment, and fuel. Now, I guess food and new dwelling costs will eventually normalize as things calm down in 2022. Fuel is hard to predict, obviously, but I don't think we're going to get runaway inflation, and therefore interest rates overall will probably stay pretty low in Australia.
Well, this month, the Reserve Bank, and no one expected it really, didn't put up interest rates, but they did say, the Reserve Bank said, Dr. Lowe said inflation's picked up more quickly than the RBA had expected, but he also said it was too early to conclude that it's sustainably within the target band, which is what you're saying. We still have to understand, is it transitory or not? And also, the next bit is, are wages going to go up? Because at the moment, real wages growth is minimal or negative because inflation is outstripping the growth of most people's wages.
Yeah, so all of those factors that made inflation low in the first place, they haven't really gone away. It's still very easy to outsource work to Manila or the Philippines or other parts of Asia. So the global labour force supply has increased. So wages growth, as you mentioned, at the last reading was only 2.2%. So for sure, it's going to rise from there. But I think what the Reserve Bank would like to see would be sort of wages growth of, say, 3 to 4%, or maybe even higher. Look, it's going to be a way off before we see the cash rate increasing. We might just start to see mortgage rates creeping higher, but in context, the cash rate is 0.1%. So I don't think it's going to be much there to spook people in the housing market.
Well, while the official cash rate's unlikely to go up, Pete, the banks are already raising fixed rates for 3 to 5 year loans considerably. They've gone up quite a bit over the last couple of months of last year and already ticking up a little bit into 2022.
Yeah, for sure. One of the things I don't read much about in the media or analysis is the fierce level of competition between lenders. So, for sure, fixed rates on mortgages, as you mentioned, have already been creeping higher. But actually, variable rates are still available from around 2%. There's a lot of competition from banks and non-bank lenders. So, again, it's keeping quite a bit of downward pressure on mortgage rates. So it's difficult for banks to make a profit, or at least to sustain their profitability. But for lenders, that's generally good news because it means there's plenty of choice, and that keeps downward pressure on mortgage rates.
Sure. In fact, variable rates seem to have dropped a bit, and I was offered a variable rate. In fact, we locked in yesterday into some new loan facilities. So I've fixed a portion of my loans, and this is not advice to other people, but having a large portfolio, part of the reason I fix my loans is to control my cash flow. And I've got a variable portion. And Pete, they offered me 1.4% variable on a very large commercial-based portfolio. They've dropped my variable rate 1%.
Yeah, so this is what I was just alluding to. I keep reading in the media, higher interest rates, we're all going to be under pressure. Well, yeah, but if you shop around, there's a lot of competition out there between the people lending the funds. So I think if consumers are smart, I don't think actually variable rates are going to be too high at all. I think you're right, fixed rates will probably continue to creep higher. But I think for people actually with their eyes open and ears to the ground and shopping around, will actually get very good deals.
So inflation is going to creep up a bit, but some factors are transitory. So we'll look at that. Interest rates, we're going to keep an eye on that. But I believe the economy is going to do well. And I bet you there's going to be a few packages that's going to stimulate the economy with an election coming up. That's one of the things that's going to, on the one hand, boost the economy, but probably on the other hand, just put a short pause on our property markets, because every time there is an election, for whatever reason, most consumers just put their hands in their pocket and property-wise, just to wait to see what the outcome is.
Yeah, so transaction levels over the past year have been higher than average, so over 600,000 transactions. I think you're right. During an election year, you tend to see a bit of a lull just as people sit back and wait to see what happens. Doesn't necessarily make a lot of sense when you look at the historic figures. The housing markets, elections don't always have the same impact that people think they will, but it does just cause people to pause. So if the election is going to be around May, maybe expect a bit of a lull in that period before things get back to normal in the second half.
And if you believe, as I do, and I think you do, that over the long term property values are going to do well, I'm not suggesting anyone should try and time the market. It's too hard. But there could well be a window of opportunity in the months of March, April, May, while other people are sitting on the sidelines. It's suggested that economic growth in Australia is going to be very strong. It's been tipped to be around 3.6% through this year. And that's going to put us in a really good position when you look at other world economies.
Yeah, so a lot of the figures in recent sort of 2 years have looked a bit odd because they tend to drop dramatically during lockdowns and then come roaring back. So I wouldn't be surprised if we saw GDP growth of 4 or 5% over the next couple of years, but it is coming from a somewhat lower base. But yeah, I guess the big picture is the government's put in a lot of stimulus into the economy, which will gradually need to wind back. And also interest rates have been very low. So yeah, I think we'll head towards full employment. There might be, month to month, the figures can be up and down a bit. But I think actually, if you look over 2022 and 23, economic growth should be very positive.
One of the factors, of course, is going to be migration back into Australia. The government's now encouraging backpackers and short-term visa holders to come in to take some of the jobs that people aren't taking up in Australia. So while there's lots of jobs being created, I think one of the other things I find good, I'm pleased to see, is the participation rates up as well. So it's not just unemployment being low, but lots more of us have got jobs. But that could well bode well for higher wages growth unless we get a flood of people looking for jobs.
Yeah, so potentially keeping a bit of downward pressure on wages. I think a big theme for property here is tight rental markets. As I mentioned, away from the CBD and student rentals, the rental market has already been tight.
Especially for houses, Pete, isn't it?
Yeah, 100%. Yeah, it's been very, very tight for family appropriate housing, especially in coastal areas and regions. Well, the government launched a $7 million advertising campaign this week to bring backpackers back to Australia. I was just debating this with my wife, Heather, only yesterday, actually, whether backpackers will come back in record numbers. I think the big challenge for backpackers will be cost. I think the cost of living has jumped for things like accommodation, hiring a car, even fuel. So there's a few things there that will keep a lid on backpackers potentially. But I suppose the other thing is we've got a backlog of 2 or 3 years of people who haven't been able to travel. So if you look back through the numbers, the biggest number of backpacker visas we had was about 7 or 8 years ago. Well, that was over 250,000. So if we get anything close to that, that's a lot of people back into the rental market, especially things like, well, the hostels, obviously, and some of those inner city rentals. But just in general, it's just a lot more bodies in Australia, and eventually we'll get the permanent migrants and the skilled migrants back as well. So I think that's a key theme for 2022 is tight rental markets.
I agree with you. I see that that's going to be an issue for tenants. It's also going to be an issue for potential first home buyers, because if they've got to spend more of their cash on rentals, it's going to be just that much harder to save a deposit.
Yeah, generally speaking, I know we talked about the inflation rate being low, but it depends whether that's for discretionary items or non-discretionary. But as I said, I mean, I've only been back in the country a few weeks, but you can certainly see the cost of certain things like eating out or travel, it has gone up. So that just might make things a bit harder for people who are trying to save to get into the market.
So I also see our property markets growing, but I think that property values are going to grow more slowly. That was a once in a generation boom that we had last year, and it isn't sustainable. But the good news is if property values don't grow as fast, particularly in our two big capital cities, Melbourne and Sydney, it's possible that APRA is going to stay on the sidelines. I know they're watching. Melbourne and Sydney seem to have slowed, while Adelaide, Brisbane, Canberra are actually still doing strong in the early data available so far this year.
The housing finance figures came out for December. They were actually better than expected, which I'd heard anecdotally around the traps from people who work in banks and lenders, that actually the demand for housing credit is still pretty good out there. So if you combine that with the falling number of listings, the tighter market, well, that points to a positive year for housing prices, maybe 5-10% growth around the trap. So I think potentially the one curveball is whether APRA steps in with any further restrictions. At this point, they would probably prefer to stay on the sidelines. But if investors come really surging back into the market, maybe that's one to watch.
Well, investors are coming back into the market, aren't they? That normally happens at this stage of the cycle, but they're going to have a little bit more choice. I hope this year is also going to be a flight to quality, where people recognise that FOMO shouldn't drive them to make poor decisions. People were buying anything and everything just to get in the market last year, including secondary properties in poor locations, or properties that are going to end up causing some problems. Because once this cycle eventually finishes, and it will in due course, you don't want to be ending up holding the wrong properties, do you, Pete?
No, I mean, it's the classic definition of a boom, isn't it? When even the rubbish sells. And that was pretty much last year, 2021. Almost anything was selling quickly because people were looking for quick gains. But I guess if you're somebody who's a property investor looking to create lifetime or intergenerational wealth, well, you really want to buy the properties that aren't going to give you headaches, and a bit more thought, I think, might be applied this year.
Now, Pete, I'm really excited you're back in Australia, because before we talk about a couple of things I want to watch out for in 2022, I'm looking forward to, we're now starting to plan for Wealth Retreat 2022, which is going to be on the Gold Coast, your home turf, in April the 2nd to the 6th. We had to put it off the last couple of years. I know you were planning to present virtually last year. Now you're going to be able to be there in life. And it's interesting, we can only have 100 people in the room, and last year it was sold out and then we had to cancel it. But 70 of those people have stayed on and kept their commitment to come. So there aren't many spots left, but I know you get a lot of learning out of Wealth Retreat apart from being one of the presenters.
Yeah, I've lost count of how many years I've been now, but I always do the full course, and I go through all of the exercises and the processes, because I get a good deal of personal value out of the Wealth Retreat week. So yeah, really looking forward to it. I thought I might have to dial in, but now I can actually be there in person, which is fantastic. And I might even sneak in a round of golf as well.
Yes, look forward to it used to be annual game of golf where you show Pam and me up being a great sports person. I wanted to also talk about the things to watch out for in 2022, but I think it's good time to mention that you've always had your own podcast with Steve Moriarty, but this year, or end of last year, you started one that comes out every Monday on property, Pete Wargent's pod. And I know I've been a guest on it, but I actually look forward to it in my walk with my dog Lincoln every week because you actually have some great guests on. And I must commend you on your style of interviewing. You actually don't give the answers to the guests that you have with questions that lead them where you want them to go. You let them give their opinions. You had a great selection of guests on Pete's Property podcast.
Yeah, thanks for the plug. So I did the Low Rates, High Returns podcast with Steve Moriarty, which is been a big learning exercise for me. And then, yes, in the property pod, I tried to have a range of guests on. I just always try to make that a learning exercise for me too. I don't try and lead guests towards a certain answer or anything like that. I try to tease out some lessons from each week. So yeah, it's been really good fun. And yeah, we've got some really good guests coming up as well.
Well, it's actually just not the regulars that we have. So my podcast, I've chosen to have half a dozen regulars all the time. You've actually found some people that are not regulars on everyone's podcast. So it's another round of thought-provoking ideas. So Pete's Property Podcast, I'd suggest you subscribe to it as I do, wherever you listen to this podcast. Now, before we finish off, Pete, then let's talk about some things to watch out for in 2022. We've already talked about maybe coronavirus, a new variant could set back the recovery. Maybe inflation could go out of control, but hopefully not. Maybe we should talk a little bit about the overseas issues because we're not immune to those. There's issues in China and also in Russia. What do you think about what's happening overseas?
Yeah, geopolitical tensions are pretty high. I think actually one of the things that is sort of rumbling away in the background is a bit of an energy crisis around the world. If you look at the price of gas, particularly coal prices, they've gone sky high. Now, this isn't all bad for Australia because we're actually an exporter of LNG and thermal coal and coking coal. So in some ways we do benefit from that. But if we have an energy crisis, I mean, that will actually contribute to global inflation and maybe higher interest rates. But also, as you mentioned, there's just tensions between, well, as you mentioned, Russia, Ukraine, and then there's challenges between China and other parts of the world. So I suppose that, that's one of the potential X factors. The new variants of the coronavirus are always sort of lurking as a threat. And I think inflation's the big one this year. The big sort of question is inflation just going to be transitory, in which case we'll be sort of kind of as you were. But if inflation sticks around and long-term inflation expectations start to rise, then central banks will have to start lifting interest rates, which tends to be a bit of a challenge for households.
Well, if overseas inflation rises, how's that going to affect Australia and our Reserve Bank? Are we going to be forced to follow suit?
Look, I mean, I guess we do have control of our own interest rates to an extent. We don't have to hike interest rates just because other countries are, but you do tend to find there's some kind of synchronicity. New Zealand's already hiked and, Australia tends to sort of move in tandem with these other countries. So, look, if the trend is higher, then we'll most likely follow. But I just think overall, I just don't think we're going to see higher interest rates or much higher interest rates. I just think, we might see a hike or two, but I can't see the Reserve Bank getting much above 1% anytime soon. So we'll have to wait and see.
Well, Pete, it's been a real pleasure having our first big picture chat. We're going to do this every month, and there's always lots of news to talk about. So I look forward to catching up with you personally on the Gold Coast at Wealth Retreat and having our regular chats. Keep well, Pete.
Cheers. Thanks, Michael.
In a moment, I want to share my mindset message with you, a lesson I learned from Jim Rohn, one of my mentors. But before I do, I want to just loop back to something I discussed with Pete Wargent a while ago, and that's Wealth Retreat, which we'll be holding on the Gold Coast on April 2nd to 6th. And that's where I've gathered a leading faculty of wealth creation, property, tax, business, accounting, finance, and stock market experts to join us. Now, this isn't another property seminar. It's not just another property seminar. It's a special annual event, which sure we had to miss out on recently last year, but something I've conducted for our high net worth clients at Metropole and a small select group of already successful property investors, business people, share traders and entrepreneurs. And one of the main reasons people tend to join us at Wealth Retreat is they want an instant peer group of other movers and shakers. Many said they were looking for ambitious, positive, like-minded, supportive doers to help them get to the next level. And I believe in today's changing financial environment with the world changing in front of our eyes, it's even more important than ever to have a supportive mastermind group around you. Now, as I said, it's not a normal property seminar. We tend to talk a lot about property, sure, and even during the breaks and over the meals, because you're living together with us for 5 days, you can grab the Metropole directors and talk as much as you want about property requirements, as much as you need. That's what they're there for. But Wealth Retreat's an opportunity for already successful business people, entrepreneurs, investors, to get together, to learn, to network, to mastermind. But it's in a great environment of abundance and achievement. You can't get that on Zoom calls. You can't just get that from blogs or books. It's an opportunity for a select group of well-read, aspiring investors to get that type of information as well, and that's going to fast-track their progress. So don't count yourself out. Go to wealthretreat.com.au, and I have a chat with everybody before we allow them to join us to make sure that it's going to work well for you. So go to wealthretreat.com.au, find out all about it, leave us your details, and I'd love to be part of your ongoing wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to talk to you about doing the remarkable. And this lesson comes from one of my mentors, the late Jim Rohn. So when it comes to meeting and conquering the negativity in your life, the things that haven't worked well in your life, here's a key question for you. What can you do starting today that will make a difference? What can you do during economic chaos? What can you do when everything goes wrong? What can you do when you run out of money, or when you don't feel well, or when things have all gone sour? What can you do? Now, Jim Rohn would say, let me give you the broad answer first. He said, you can do the most remarkable things no matter what happens. He said people can do incredible things, unbelievable things, despite the most impossible or disastrous circumstances. Now, here's why humans can do remarkable things. Because humans are remarkable. Jim Rohn said humans are different to any other creation. He said when a dog starts with weeds, he winds up with weeds. And there's a reason. It's because he's a dog. But that's not true with human beings. Humans can start with weeds and turn them into gardens. Humans can turn nothing into something, sense into fortunes, disaster into success. And the reason they can do such remarkable things, according to Jim Rohn, is because they are remarkable. So try reaching down in yourself, and you're going to come up with some more of those remarkable human gifts. They're there. They're waiting. They're waiting for you to discover them, to employ them. And with those gifts, you can change anything for yourself, anything that you wish to change. So I challenge you to do that, because you can change. If you don't like how something's going for you, change it. If something isn't enough, change it. If something doesn't suit you, change it. If something doesn't please you, change it. You don't have to be the same after today, ever. If you don't like the present address where you are, change it. You're not a tree. You're not stuck in that spot. If there's one thing to get excited about, it's your ability to make yourself do the necessary things to get the desired results, to turn the negative into success. And in my mind, that's true excitement. I hope you enjoyed my chat with Pete today in the Mindset Message. And if you got some benefit from it, I'd really, really appreciate it if you just told one person about the Michael Yardney podcast. You can tell as many as you like, of course, but I'd like to make as many Australians, many people, as financially literate as possible. So please help me by spreading the word. And you can always leave a review on wherever you listen to this podcast. And David C. just recently left a review on Apple podcast. He said, great insights. Michael, thoroughly enjoyed listening to your regular summer series podcast during my daily walks around the park. Lots of useful information and advice, and a great use of valuable time to continue learning all things property. Well, thank you very much for leaving that 5-star review, David. And David, like everyone else who leaves me a review, will get a copy of one of my books. And in fact, I've already posted that out to David because he contacted me. I look forward to helping you. I look forward to catching up with you again real soon, twice a week on this podcast. But in the meantime, you can catch me on social media. Just look for Michael Yardney, or you can join my private Facebook group where you're going to get lots of information that I don't leave elsewhere. Once a day, I leave a tip of some sort on the private Facebook group. Go to Facebook and look for the Property Update Facebook group. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?